Hi there, thanks for joining me. Happy New Year. I hope you had a fantastic time with your family and friends. My name's Tim, I'm from Think Property Business. Today's video is about the Australian property market for 2022, how we're positioned and what's been forecast moving through this year. So I hope you enjoy. If you haven't subscribed to my channel already, it'd be great to have you on board. So let's get into it. So let's have a quick look back at 2021. We can see that the highest growth rate for capitals, which was actually between 25 to 30%, was for Sydney, Hobart, Brisbane and Canberra. And then the best performing markets, there are approximately 200 regional towns and cities with more than 30 recording greater than 30% capital growth, which is amazing. And then the best of the best for the regionals, we saw Bendigo and Warrnambool in Victoria, Kempsey and Maitland in New South Wales, Geraldton in WA and Noosa in Queensland. So where we're positioned at the beginning of 2022, we have basically seen that there was a lot of people who got it wrong, and because of the international border closures and no population growth, that a lot of people thought there was going to be a massive downturn in the property market. In fact, what we've been experiencing is the second biggest property boom in Australian history. So it's been quite unbelievable that a lot of people got it wrong. And again, we're seeing just across the nation through all markets, just everywhere basically performing as far as capital growth goes. And then we talk about interest rates. So again, many people believe that an interest rate rise will not bring a halt to the property market. So if you're thinking that the market will pull back and there'll be bargains to be had because that people will basically have to sell properties when interest rates start to move up, then you could be caught out with that thought or that view. And history shows that many locations experienced double-digit growth when interest rates were indeed 10% and higher. And then more recently, CBA has stated that households have around $240 billion in liquidity, mostly in redraw and offset accounts. And then through to household budgets, a large majority of mortgage holders have well-established budgets with significant loan repayment buffers, and therefore no budgetary adjustment will be required when loan interest rates increase. So we're all pretty well positioned moving through into 2022 in a position where it's not unstable. It's very unlikely that interest rate rises are going to bring the market down. In fact, may not even slow it down. So we basically will see probably that the market will start to peter out when the market basically gets to a point where it's as much as they can bear. But again, we're positioned pretty strongly moving through into 2022. If we have a look at economy factors, then for the first time in decades, Australia is approaching full employment, with the RBA forecasting 4% unemployment by the end of 2023. And wage growth is expected to accelerate, and business investment is forecast to be a record high of $200 billion in 2022. So again, there's a lot of things underpinning the Australian property market leading into 2022. From an infrastructure investment point of view, we're headed for Australia's biggest infrastructure boom, with 634 committed public sector projects. And by the end of 2025, there are estimated 430 projects worth $218 billion due to be completed, with a peak of $52 billion in 2023. And then 105,000 new jobs in the sector required by 2023 for skills that currently are not in Australia. Now for migration, pre-COVID, our population increased by around 200,000 from overseas migration. And recently the federal government has announced the reopening of the international borders for the first time in 2 years, with international students being very important to inner cities. And it's expected that with Sydney and Melbourne having a much softer economy than other areas of the country, it is unlikely that they will receive the same distribution of overseas migration as they have in past years. Internal migration away from capital cities is expected to gain pace. 108,000 people left capital cities to relocate to regional areas in the 5 years prior to COVID. And over the first 12 months of COVID, 45,000 people left capital cities for the regional lifestyle and the ability to work from home. Some other factors worth considering: the potential for the highest ever levels of spending for home upgrades and relocations going through this year. Regional areas are suffering the most from a shortage of skilled workers to fill jobs, particularly in the construction, manufacturing, agriculture, hospitality and medical sectors. And interestingly, dwellings listed for sale as at the end of November 2021 is the lowest in 11 years, yet our population has grown by 3.9 million since then. Okay, let's have a look at the capitals, where what's happened and what's forecast to continue in through this year. So for Adelaide, to start with, in 2021, Adelaide had a 20% increase in house sales volumes of 19,000, which was the highest since 2002, with similar expected for 2022. If we move to Canberra, another strong year is expected for 2022, with the country's third smallest city again to outperform other capitals, with potential for 15% capital growth for houses. And it's stated that investors should be cautious of apartments when it comes to investing in Canberra. And for Perth recorded its best year since 2006. However, median house prices only returned to the values that they were in 2015. The outlook is positive, with the possibility of double-digit growth for 2022. A heavy reliance on Chinese demand for WA commodities, though, is important to keep an eye on. Now for Brisbane, so potentially will be the best performing capital in 2022, with around 20% growth predicted, and could be as high, which is incredible, as high as 35 to 45% to the end of 2023. Brisbane's current growth is coming from 15 years of lean performance, so it's held back quite a lot and starting to catch up now, and will continue to do through 2022 and 2023. Hobart, the strongest capital city market for 7 years, 70% less resale supply compared to 5 years ago. Strong economy and the chance of another surge in internal migration. Capital growth rate of around 20% predicted for 2022. So good signs for Brisbane and Hobart. Then with Darwin's economy is improving, as is the interest in property by investors and first home buyers. House sales during 2021 reached levels not seen since 2015, and apartment sales were 100% higher than for 2019. So good signs for those three capitals, Brisbane, Hobart and Darwin. Okay, so for Melbourne and Sydney, firstly Melbourne experiencing 260 out of 560 days in lockdown, more than any other city in the world. But Melbourne still managed some growth in 2021. 2022 through 2023 could see its real estate market exposed, so 125,000 less jobs in October 2021 than 2 years earlier, and tens of thousands of people have left Melbourne. State government debt is now 3 times higher than pandemic levels. For Sydney, with restrictions through the second half of 2021, it's difficult to get a true reading of Sydney's current property market. There are concerns about Sydney's economy. ABS data states that Greater Sydney had 4.7% less jobs in October 2021 than 2 years earlier. An estimated 50,000 people have left Sydney during the first 18 months of COVID, and housing supply volumes are trending up. So maybe not as positive for Melbourne and Sydney moving forward as those other capitals we looked at. So there's a bit of a message coming through that we should really be keeping an eye on regionals when it comes to property investment. And many regional economies are stronger than capital cities. And there's a new era of lifestyle movement. So the popularity of working from home, low housing supply, and continued high rates of internal migration will again see regional markets having stronger property market performances than for capital cities. So there is a big change in these, I guess, drivers that we used to see in the past. And if we went into basically regional areas, you're looking for cash flow and that you really have to forego capital growth. But with the demand from population moving to these areas, the ability to work from home, affordability, lifestyle changes, all these things basically is an appeal to moving away from capital cities, and therefore obviously supply and demand, and that's going to have an impact on capital growth rates for regional areas moving forward. And so for us as investors, regional areas are providing us with a combination of both capital growth and cash flow. So if you are looking to get into the market, it may be really worthwhile. You could be missing out on some opportunities if you basically keep your mindset into, depending on obviously where you're living, but certainly if you're living in a capital city and you think that's where you should be investing, then again, we might be missing out on opportunities, particularly with the ability to acquire property in some of these large regional areas for a lot less than we'd be paying for in capital cities. So affordability when it comes to the amount of capital that we have to tap into, if you like, or have available to invest in property, again for those capital gains and also for the cash flow, then regional areas are definitely something to keep an eye on. All right, so if we look at the property market moving into 2022, bit of a wrap up and an overview, if you like. So recently, the RBA data states that the financial capacity within household budgets, again, equity, available redraw and offset accounts, has never been better. The current volume of resale supply is similar to 2010. However, our population has increased by 3.9 million since then, and this could see further double-digit growth across most of the country. Propertyology has stated that Adelaide, Brisbane, Hobart and Canberra could see between 30 and 45% capital growth by the end of 2023 for houses. So another really, really strong couple of years coming up for Adelaide, Brisbane, Hobart and Canberra. There's also the possibility that asking rents for houses could increase by $10,000 in many locations this year, again according to Propertyology. And finally the population of combined capital cities declined by 17,000 during the first year of COVID. However, the combined regional population increased by 51,000. So again, there's a lot of reason to get excited, or at least very interested in regional areas for those factors that I guess underpin any market, supply and demand, but also confidence of the market is still there. So a lot of people who, yes, it is, affordability is definitely an issue if you look at some of the prices in, again, particularly capital cities, but there are other areas of the country where again, if you're not at least considering, then you could be missing out on some growth there, particularly if you have that mindset that regional areas are really only for cash flow. So again, if you're thinking that the market's going to pull back dramatically and there's going to be bargains to be had, I think could be waiting quite some time for that to happen, if it indeed happens at all. So there's a lot of people out there, and again, if we look at where this information is coming from, there's no agenda behind it. This is actually just facts. So there's no nobody sort of stating these things because they've again got some sort of agenda and they're looking to sell you something, whatever. This is all from independent sources. So a lot of reasons why we should be, as investors, pretty confident moving forward. And also too, that again, this view, I guess, for some around interest rates rising, that it's going to have a big impact on slowing the market down, could be again not realised. So some really good positive signs for our property market moving through 2022 and indeed even into next year, 2023. So some strong indicators and positive signs for the Australian property market through 2022 and beyond. Thank you so much for joining me. I really appreciate you taking the time to watch my video, and I look forward to catching up with you next time. Take care.